So let's go ahead and let's take a look at the charts that we were looking at in June. And I want to look at those. These are longer term charts with some shorter term charts. And we're going to see if there's any patterns, if short and long term are agreeing in stocks, bonds, currencies, and commodities. All right, which ones are agreeing and which ones are fighting with each other. So we're going to start with the S&P 500. And as you can see here, last month, the S&P 500, we saw this coming up into new highs. We're looking for that target of 550 has been hit. Now we're looking for an extended target, which should take us to around the 580 mark. Last month, I was talking about this taking maybe as far as November before we hit that 580 target. Well, I got a new chart to show you, and this is one that is going back to about the end of February. So beginning of March, when the S&P double bottoms here at 495, we got above the April highs or the end of March highs at 525. And that really kind of became some support. So resistance becomes support. We moved higher. But what's happened here recently is we're getting something called a bearish reversal candle. All right. A bearish reversal candle, folks. And so what you're seeing here is you're seeing that that top, and not only the top, but the candle is what we see here, where we opened higher than we closed, but we got that big spike up that took us up to this area, this 550 area. So are we possibly going to see a little bit of a pullback? That's what the short-term chart is telling us. All right, for the bond market, we were looking at longer-term charts pointing in the downward direction. The highs up here near 100, and then lower highs and lower lows that took us down to 87.50. We've seen a bit of a rally here since May, but are we turning farther south? The long-term charts say that we should come down and retest the 87.5 low, possibly go as low as 82.5. What does the short-term chart tell us? Well, coming into today, the short-term chart is showing that TLT, which is the iShares Barclays 20-year Treasury ETF, is closing below both the 10-day and the 30-day simple moving average. A lot of that happened on Friday. So we're looking for a Fibonacci retracement, all right, that are telling us that we should continue lower. If we go below 92, which is support back in February, all right, and is also, we're seeing some support here in the last month. We closed below that low, and we could be back down, hitting that 87.5 low that we saw back at the end of April, right? So it looks to me like the bond market short term is agreeing with the long term. Let's take a look at cash. UUP, that's the double dollar index. Long term, we've been seeing cash climbing for the year. In fact, since the beginning of 2024, we've seen cash go from below 27 to above 29. We see that 30 area as a potential target, and we're seeing that happening out into the fall of this year. What does the short-term chart tell us? The short-term chart is agreeing. The breakout that we've seen, all right, that multi-month breakout, or that multi-month, sideways pattern. We broke out of that a couple weeks ago. We seem to be above it, and it tells us that we should see higher highs. So the short term for cash agrees with the long term for cash. Take a look at oil, USO. Our longer term chart showed a target of 82.50 by mid-July. We're at the beginning of July right now. If this is going to happen, it's going to happen in the next 2 weeks. What does the shorter term chart show us? It shows us resistance points at 80, which we're at right now. We're hitting that mark right now. All right, we've had a really nice breakout here over the last couple weeks. We're now hitting the 80 resistance. Look what's next, 82.50. That very well could happen here in the next 2 weeks. So long-term, short-term, oil agree. Finally, gold, GLD, the Spider Gold shares. The longer-term chart that we were looking at from the beginning of the year shows the lows down here around 185. The highs here at 225. We hit that high once, twice. We've come back and we've hit the lows. So we've double topped. We've also double bottomed in this sideways chart between 213 and 225. Where do we go from here? Let's take a look at the short-term chart and see if it tells us anything different. So if you blow this out a little bit more, you'll see that that double top did not triple top. In fact, we're seeing lower highs and same lows here, all right, in April and again in June. And we're seeing lower highs in May and in June as we're coming lower. So we're getting a squeeze, which is what we refer to as a triangle, or in this case, a descending triangle on GLD. Now, it's important, and I say it here, to monitor which way it breaks out. It could break to the upside, and this could be what's called a bullish flag, or it could break to the downside out of this descending triangle. Time will tell where this is likely to go, but what I'm seeing here right now is that the long-term chart and the short-term charts are not agreeing with GLD. So, in summary, on our overall charts, when looking at the long versus short, long and short charts agree for bonds. Remember, looking like bonds want to decelerate and continue down. The dollar has been strengthening in both the long-term chart and the short-term chart, and oil. But remember, oil is just a shorter-term outlook. We're seeing that happening here within the next 2 weeks. But these three charts, the long and short, agree. The long-term chart and the short-term chart for the S&P and for gold both disagree. Now, I'm going to mention one more thing, and that is that when I look at the long and short charts for bonds, dollar, and oil, pull oil out for a moment. And if the bond market continues lower, the dollar should continue higher. And I think that's going to put pressure on both the S&P 500 and gold. So time will tell. Not that much time needed, but time will tell which of these tug of wars are going to win. Is it going to be currencies and bonds, or is it going to be assets like the S&P 500 and gold?